What if I told you that by 2026, a single Bitcoin could be worth $200,000? It sounds incredible, right? But this isn't just wishful thinking. It's a projection being seriously discussed by financial analysts and crypto experts around the globe. Today, we're diving deep into the reasons behind this bold prediction. We'll explore the key factors that could propel Bitcoin to these unprecedented heights. Separating the hype from the hard data. Is a $200,000 Bitcoin a realistic possibility? Or is it just a fantasy? Stick around as we unpack the evidence, examine the market dynamics, and give you a comprehensive look at what the future might hold for the king of cryptocurrencies. This is a journey you won't want to miss. First, let's talk about the Bitcoin halving. This is arguably the most significant built-in event in Bitcoin's code. For those new to the concept, the halving happens approximately every 4 years. It cuts the reward for mining new blocks in half. This means the rate at which new Bitcoin is created slows down dramatically. The most recent halving occurred in 2024, and history has shown us a clear pattern. After the halvings in 2012, 2016, and 2020, Bitcoin's price entered a massive bull run in the following 12 to 18 months. The logic is simple: supply and demand. As the new supply of Bitcoin shrinks, existing Bitcoin becomes scarcer and, therefore, more valuable. Assuming demand stays the same or increases, the 2024 halving has set the stage. By 2026, we'll be right in the middle of the typical post-halving growth cycle. Analysts are modeling this historical precedent, suggesting that this cycle will be no different and could even be more powerful than the ones before it. Next up is the game changer: the approval of spot Bitcoin ETFs, or exchange-traded funds, in the United States. This was a monumental step for the entire crypto industry. Before the ETFs, buying Bitcoin was a hurdle for many traditional investors and institutions. It involved navigating crypto exchanges, managing private keys, and dealing with a completely new asset class. The ETFs changed everything. Now, major Wall Street firms like BlackRock and Fidelity offer a way for anyone with a brokerage account to get exposure to Bitcoin as easily as buying a stock. This has unlocked the floodgate of capital. We're talking about trillions of dollars in institutional money, retirement funds, and pension plans that can now flow into Bitcoin. The initial inflows after the ETF launch were staggering, and many analysts believe we're only seeing the tip of the iceberg. By 2026, the cumulative effect of this constant, steady buying pressure from some of the world's largest financial players could be a primary driver, pushing Bitcoin's price into the six-figure territory. It's no longer a niche asset. It's being integrated into the global financial system. Let's not forget the bigger picture, the macroeconomic environment. We live in a world of increasing inflation and economic uncertainty. Central banks around the globe have been printing money at historic rates, devaluing traditional currencies like the US dollar. In this environment, people and institutions are desperately looking for a safe haven, a store of value to protect their wealth. Gold has traditionally played this role, but Bitcoin is increasingly being called digital gold. Why? Because it has a fixed supply of 21 million coins. No government or central bank can print more of it. This makes it an incredibly attractive hedge against inflation. As more people lose faith in their local currencies and seek alternatives, Bitcoin stands out as a decentralized, global, and provably scarce asset. If global economic instability continues or worsens by 2026, the flight to safety could turn into a stampede, with a significant portion of that capital finding its way into Bitcoin, driving its value up exponentially. Another crucial factor is adoption, both at the retail and corporate levels. We're seeing a clear trend. More and more big-name companies are adding Bitcoin to their balance sheets, viewing it as a treasury reserve asset. Think of companies like MicroStrategy, which has famously acquired billions of dollars worth of Bitcoin. This corporate adoption lends massive credibility and also removes a significant amount of supply from the open market. On the retail side, user-friendly apps and payment platforms are making it easier than ever for the average person to buy, sell, and even use Bitcoin for transactions. Countries like El Salvador have made it legal tender. And while that's an early experiment, it's set to precede. By 2026, we can expect this trend to accelerate. Imagine a world where major online retailers accept Bitcoin, or where it's a standard option in your digital wallet. Each new user, each new company, each new integration builds upon the network effect, making Bitcoin more valuable and more entrenched in our daily lives. Now, let's look at the technological developments within the Bitcoin ecosystem itself. While Bitcoin's core protocol is famously stable and secure, innovation is happening on layers built on top of it. The Lightning Network, for example, is a Layer 2 solution designed to make Bitcoin transactions faster and cheaper, making it viable for everyday payments, like buying a cup of coffee. As the Lightning Network grows and becomes more robust, it addresses one of the main criticisms leveled against Bitcoin: its scalability. Furthermore, other developments like ordinals and runes are bringing new functionalities to the Bitcoin blockchain, similar to NFTs and tokens on other chains. This expanding utility attracts more developers, users, and capital to the ecosystem. By 2026, a more mature and functional Bitcoin network, capable of handling a massive volume of transactions and supporting a variety of applications, will be a powerful catalyst for its price appreciation. It's evolving from just a store of value to a multifaceted financial network. So, let's put it all together. You have the supply shock from the 2024 halving, creating a scarcity crunch. You have an unprecedented wave of demand from institutional investors through spot Bitcoin ETFs. You have a macroeconomic backdrop of inflation and uncertainty, pushing people towards hard assets like digital gold. You have accelerating adoption from both corporations and everyday users, expanding the network effect. And finally, you have ongoing technological improvements making the network more useful and scalable. When you combine all these powerful forces, the prediction of a $200,000 Bitcoin by 2026 starts to look less like a wild guess and more like a logical conclusion, based on the convergence of multiple powerful trends. Each factor amplifies the others, creating a perfect storm for a potential parabolic price increase. Of course, no prediction is without its risks. We have to be realistic. The crypto market is notoriously volatile. A major regulatory crackdown in a key country, a newly discovered security flaw, or a global recession that forces institutions to sell their assets could all negatively impact Bitcoin's price. The path to $200,000 will not be a straight line. There will be sharp corrections and periods of doubt along the way. Investing in Bitcoin requires a strong conviction and a long-term perspective. This isn't about getting rich quick. It's about understanding the fundamental shifts happening in finance and technology. However, many analysts believe that the fundamental drivers we discuss are so strong that they will likely overcome these potential hurdles in the long run. The upside potential, they argue, far outweighs the downside risks for those willing to navigate the volatility. So, what does this mean for you? This isn't financial advice, but it is food for thought. The narrative around Bitcoin is shifting from a speculative digital curiosity to a legitimate global macro asset. The smart money is already moving in. Understanding the reasons behind the $200,000 prediction for 2026 allows you to make more informed decisions. It's about looking at the confluence of the halving cycle, institutional adoption via ETFs, the macroeconomic environment, and technological progress. These are not small things. They are seismic shifts. Whether Bitcoin hits exactly $200,000 or not is less important than understanding the direction it's heading. The trends are clear, and they all point towards significant growth in the coming years. As we look towards 2026, the case for a much higher Bitcoin price is compelling. It's built on a foundation of mathematical scarcity, increasing institutional validation, and growing global adoption. The journey will be volatile, but for those who believe in its potential as a decentralized store of value, in an increasingly uncertain world, the future looks incredibly bright. The next 2 years could be some of the most transformative in Bitcoin's history. Thank you for joining us on this deep dive into Bitcoin's potential future. If you found this information valuable, make sure to like this video and subscribe to our channel for more insights into the world of cryptocurrency. Let us know your thoughts in the comments below. Do you think 200K by 2026 is possible? We'll see you in the next one.